So you wanna go to war with me? You're talking like you think you're royalty. You think that I'm afraid, but I don't break. I heard you question my stability. You think I'll fall just like a guillotine, but I am here to stay. Won't look away. The storm is coming, so you better start running. No, you can't control feeling my bones. I'm coming for it, coming for it. I'm coming for the throne. I'm coming for the throne. So you wanna be my enemy? You should've known I never kissed the rain. Ice runs in my veins, won't play it safe. I don't belong with your nobility. Who died and made you king of anything? You think that I'm insane? It's your mistake. Kingdoms rise and fall. I've come to take it all. I take it. I've come to take it. Kingdoms rise and fall. I've come to take it all. I'll take it all. The storm is coming, so you better start running. No, you can't control feeling my bones. I'm coming for it, coming for it. I'm coming for the throne. I'm coming for the throne.
Let's go. Yo, I'm like an addict, do I gotta have it. I ain't even playing, got a really bad habit. If it moves, gotta grab it, fuse like a magnet. Lose, won't have it till I'm doomed in a casket. I ain't playing, got a weird mind. If you work 8 hours, I'ma work 9. If the shit tastes sour, you should taste mine. I'ma stay in power for a long time. Get up, nah, I ain't a quitter. Toss me the ball, I'm a really big hitter. Big picture, I'm a straight killer. Rising the song to the highest bidder. Got juice, got gas, I'ma move fast. New shoes, new tracks, like who's that? I'm new, come back, better than last. Yeah, it's a new me, never gonna look back. Never gonna look back. Cause damn, I was built to last. You move slow and I move fast, and that's facts. Only I can make a change. Slowly take a step today. I will never be the same. Cause that's what it takes. I take shots to the top, I'll get it. I got one life, I'ma do all to win it. I do what's right. gonna look back, 'cause damn, I was built to last. You move slow and I move fast, and that's facts. Only I can make a change, slowly take a step today. I will never be the same, 'cause that's what it takes.
All right, y'all. Happy Monday evening. Hang on one second. Let me see if I can get our guest in here. Chat. Where is the collab? There you are, Sparky. How are you?
Good. I still can't see you, which is interesting, but that's all right.
Yeah, we're trying out something new on Streamlabs instead of Restream, because we have a lot of echoing problems with Restream, especially when we're doing screen share. One problem I can already see with this version of the collab cam on Streamlabs is, like, you are not going to be able to share a screen with me. Do you have an option to share a screen in your little?
I do have an option. I'm afraid to click it.
Yeah, let's save that. Let's save that as a test later tonight. And I had Dan, aka Yellow Ono, on this afternoon. We were testing it out, and he said he had about a 2-minute lag on the video, but he could hear the audio just fine. So it's not bug free, Sparky.
No, and the one thing I know, I apologize for everybody looking at my crap-filled office, because this is
we need to.
I do my work from home, and I have a nice, in my normal meeting thing, I either can put up a background that looks like pristine, wilderness, or at least blur it, and I don't see that option, so you get to see my Jeep top and my bike and my dog.
That's something we need to check into. Can you do a green screen on this? That's
or just blur it, like I say in Teams, or I think on even some of the other stuff, it lets you blur the background.
That's okay. Hey, we all got a life to live. It's okay if it's a little bit messy. Guys, tonight I have Sparky on as a guest. I've been trying to coordinate with him for a week or so since these warrants were announced by GameStop. Look, you guys know that I am opinionated. I am tenacious in my opinion. It's typically, if I'm opinionated, it's because it's something that I have particularly researched. Otherwise, like I said this afternoon, if I don't know, I'll just tell you I don't know. If I have an opinion, I'm going to argue my opinion. It doesn't mean that I'm right. So let's just be fair. It's an opinion. But I am smart enough to bring on people smarter than me. And tonight we have Sparky here to answer my questions and your questions if you have them. He is a bond trader. Is that a fair way to summarize it, Sparky?
So I'm a fixed income portfolio.
Professional bond trader. You don't trade GameStop bonds, right?
No, that would not be in the purview of what I do now. Is all high investment grade.
But safe to say, if we want to get in the mind of a bond trader or understand how bond traders think, you might be a guy that people want to ask questions to.
Absolutely.
All right. So guys, we don't sit here and make up DD. We don't tell you what you want to hear. We don't say all this nonsense stuff that you hear on the pumper channels. I try and surround myself with people way smarter than me, because I know my limitations. I know when to stay between the lines and when to reach out for help. Markets with May is a bond trader also. I haven't talked to May in a long time, but Sparky and I have from time to time conversations about stuff, and he's a good resource. Tonight I want to share that resource with you. So if you have questions about bonds, and specifically tonight I think maybe we run through how the bond holders in GameStop might be looking at these warrants. Sparky, I'm really curious to hear any opening thoughts you have about what might do the bond traders and GameStop care about these warrants. That's kind of like my first question.
Well, it's going to be split into two different groups. You're going to have the convert holders, and I see this wrong on YouTube all the time. The convert holders, and it's right in the releases they did, are getting warrants equal to the shares that the bonds would eventually convert into. So
as if converted is the language they use.
And that's standard in every single convert issue. So this isn't anything new. Nobody thought of this ahead of time. They do that on purpose in every convertible issue. Would also, if they did an at the market offering, what would happen in that case is it would adjust I don't know exactly the math behind it, but it would adjust the exchange price where they could get it down.
I will direct you guys, and you too, Sparky, to Article Section 14 of the bond indenture for GameStop, right, where it goes through exactly what you're talking about, Sparky. If there were any sort of dilution, GameStop has a couple choices. Often what you see is an adjustment of the conversion rate, and the math is actually right there. But in the case of something like a warrant, they could also just say, oh, well, we're going to give you the same benefit as we're giving the equity holders, so everybody's still square, and we don't want to adjust the conversion rate, but here's your warrants. Right? We still got you there, Sparky? Did we lose you? He looks like he's frozen. I hear you, Richie Rich. He says it's difficult we need to get Sparky to invest in a professional mic is what we need. I agree. I had to put my headset on because I was trying to listen to him on my speakers, and it was, well, I'm old and my ears probably aren't perfect, but it was tough. I'm going to give him a minute to see if he comes back, and if not, I'll restart the collab cam. At any rate, man, what a awkward time. I really wanted to hear his answer. All right, he dropped off. Let's see if he can click on the link and get back in. I'm going to move that up there. And by the way, guys, if you want to come on camera with us, I'd be happy to have one more person on here so we can test out 3 people on the collab cam, see what we can break that way. I'll ask him to
come back, but maybe you can't hear.
Yeah, I have to click a button to bring you back. Right. They can see you now. If there's any way you could get a little bit closer to your microphone, they got a couple people saying that they.
All right, I will be happy to do that.
Or just speak up a little bit, and I'm still gonna recommend that you go on Amazon and order a real microphone.
I will do that. I will do that with all my YouTube money, which I don't have.
Hey, I'll send you the $10 I make per month, Sparky.
Exactly. But hey, anyway, you had asked me what, from a bondholder perspective, what this means.
Yeah.
And
how do you think they're thinking? Are they excited about these warrants? Are they worried about it? Does it even matter?
No, because this is it actually, for the depending on what their hedge is really what it comes down to. Because it's interesting because if let's say you're 80% hedged, now I'm just using that as a number.
By hedge, you mean they have sold shares short?
80% of the value of the bonds, which actually right now is over 100. So you're always talking about adjust your hedge. But let's just keep it simple. They have 10 million in bonds. They're short $8 million worth of stock. Okay, let's just do that.
That seems like a high percentage, but I'll let you roll with it. Go ahead.
But, well, what the math I was going to explain is don't forget they're getting warrants for 10 million worth of, or just use $1 million. They're getting warrants for the whole share value for the number of shares that are in those converts. So if they're only 40% hedged, that means they're actually going to have extra warrants
Yeah, I was looking at the rough numbers, Sparky. They're getting 14 million warrants, and by my rough calculations, they're short about 40 million shares, so they only need 4 million warrants.
Right, but see, this is what's good for them, and it's good for them for a reason. And this is why I don't want to get into MOAS or any of that stuff, but it's why some of the guys that are loud, you hear, I was watching a guy today, and I'm not going to mention names, who was screaming at his video for the last 20 minutes of it, talking about how it's going to 1 million. But the thing you got to remember is they're in your club. The convert holders, those hedge guys, are in your club. They're in your camp. So I think what's going to end up happening, and I don't know, nobody's going to know what the numbers are probably till the middle of October, a couple days after they get in and they start trading. You have to remember, I think almost all of the hedge guys are going to get significantly more warrants than they need. The ones they're hedged against, the shares are short, it doesn't help them or hurt them. They're going to get the warrants and they have to turn around and send them to somebody else. Does that make sense? Right. They're not, whoever they sold stock short to, it's going to go to them. And that has nothing to do with borrows or being in a margin account. Those are going to go away from them, but they're going to end up with somewhere between, I don't know, 20 and 50%, depending on their hedge maybe, of warrants. Now they're going to do one of two things though. They're going to use, hedge funds and our guys love having something else to trade. They're either now going to start trading those as a hedge or something else, or set up a different trade, buy, put, sell calls, whatever they can do what they need to do against them. Or they're just going to hang on to them and use them as a hedge. And what they'll do, these quant guys run these very sophisticated math programs, not just every month or every week. I mean, probably a couple times a day. And they'll wait on the warrants to say, okay, these things look like they're mathematically too expensive or rich to the rest of the trade, and then maybe they'll peel some off. And the reason I think this is important is there is probably, what did you say, there was 60 million shares sold short?
66 million shares sold short, according to the last official report. And it's
40 million of them are the hedge guys.
If I look at the short interest change from March till now, it's about 40 million up. So. Right. And most of that, we saw when the bonds were issued, the short interest rose dramatically, as we would expect, because they're loading up their hedge. Right. So let's just say roughly 40 million of the shorts are bondholders.
So what I would suggest is there's obviously going to be 20 million shares, which is 200,000 warrants or 2 million warrants that are going to have to be bought by somebody that's just short. It has nothing to do with converts. Well, you're going to... I think you'll get a little pinch and a little premium in the price of the warrants, maybe because of that. There will be buyers for them, but there's probably also going to be sellers. Like I'm saying, these hedge fund guys that are trading the converts, if they have extra ones, there will be some price, probably a lot closer to the real math than maybe what retail is selling. The warrants are going to be available, and it'll settle into the right price. And it wouldn't surprise me if there's a little pinch in the premium on them, but it's not going to be. I saw somebody today, and again, I don't ever call out YouTubers because I don't have the time or the stones to go do my own show, but it's not going to be. I saw somebody saying, the price is going to go up every dollar, it's going to go up 10 times the warrant. It's going to go up $10 because it was 1 for 10. Well, that's not how it works. It's just
the warrants are basically going to be priced similar to a leap, like a call option. You only got time value, but as the price goes up closer to the strike or the exercise price, the value of the warrant will increase, and then it starts going. Once you're over the exercise price, it should go up dollar for dollar.
Yeah, it'll go dollar for dollar, and you should get a little extra juice for the volatility. So let's say, in other words, if it gets above, let's say the stock trades in 6 months, it trades at $33 and the 32, you're going to get that dollar. And if it rushes up there, you're going to get a premium for that last 6 months option. The flip side is, let's say it goes to 33 in a week and then sits there. Well, you're still going to have the warrant at some point still going to be worth $1, but that volatility premium is going to go down.
The warrant it'll bleed out its price because of volatility decreasing.
And I know you and I were trying to figure out where these things are going to get priced. And the higher the stock goes, I think obviously the higher the warrant will be. But because didn't they say it's going to price like on the third or the second or whatever it is, whatever the value it'll trade at, it's going to be kind of, it's going to matter on what the price of the stock is. When
Right. I ran some models this weekend using about a 24.50 price, and I was coming up with around $3 for the warrant price.
And I think if it was 26, it probably is 5 or something. So somewhere in that range, I think is where it's going to open. But Tony, I'm going to ask you, because I haven't seen it done. Not a lot of people have done this. When that warrant goes ex-dividend, I think the stock price, let's say it's $5, just for
good topic.
I think when it goes ex-dividend, the stock will drop 50 cents. Not again, it's 1 for 10. It won't go down $5. But if everything was equal in the world, like a regular cash dividend or you think about a stock dividend when they give you shares, it'll go down by the ratio of what they gave you because there's more of them. It may take. Wouldn't surprise me if the stock goes down and everybody runs in and buys it. It may not. It may fill that gap immediately, but as time goes, 2 weeks after this all happens, and there's no explosion and no big move up, the value of the stock should reflect that you own warrants that before the record date. So you have this piece of paper. If it's worth 5, the stock should be 50 cents less or something close to that.
I see some people in the chat saying that you're cutting out or that it's muffled still. It sounds clear to me, so I'll have to watch it on replay. We're doing a little test tonight with some new software.
I'll try to speak slower and more clearly. So we'll try that.
Yeah, I don't know if it's the software tool Sparky or if it's your microphone. But tonight's just a test, so apologies in advance if it's not perfect. And if it
from Texas to send me one of his old high quality mics.
if this tool sucks, then we'll just go back to Restream. That's easy enough.
It very well may be me just because I have a general office, camera.
Getting back to your thoughts about the ex-dividend date. So here's how I'm looking at it, Sparky. If the warrant is worth $3 on October 3rd. Then on the ex-dividend date, you divide $3 by 10 because it's
go down 30 cents.
You should see the stock go down 30 cents. Now, I say that because technically that's how it's going to work, but functionally what we see on our screen, it may or may not be noticeable depending on what's going on with the price action that day. Would you agree?
No, and that's, I think, what I was trying to say, and maybe I didn't do it. It wouldn't surprise me if this is all new, everybody's excited, whatever that gap is from the open that should reflect 30 or 50 cents or whatever, it wouldn't surprise me if the market fills that just with some.
Yeah. So I want you guys.
Over time, it should reduce by that over days or a week or whatever would be a reasonable amount of time, that kind of the excitement.
And I saw that the OCC put out a memo on Friday. I think it was Friday also, already adjusting. The options chain is going to adjust for the exact same reason. The options chain is going to adjust on October 3rd. So any options that are in existence now will be GME1, and the options chain will reset without the dividend on regular GME options.
But here's what's important about that too, Tony's, again, for the convert guys or even just regular shorters, forget convert guys that are short to stock and maybe they have to go scrounge to get options. If they're short to stock, especially over time, that in essence their value is going to reduce by whatever the warrant is. So if they're going to be forced to have to procure that warrant somewhere, buy it in the open market or whatever they're going to do. In their book, maybe not the first day, maybe not the first 5 days, that stock versus what the warrant is going to trade at is going to equalize and reflect that difference. Does that make sense?
Yep.
So it's so the short that even doesn't have the convert and has to go buy a warrant, he's still he might get pinched a little by premium, but he's not in any stress other than some small percentage of extra premium, maybe from volatility, that this whole action happened. I mean, this is a very nice way for the company. It doesn't cost them anything to do it. It's a nice little kiss for holders, because they're getting not only probably the value, their stock goes down, but they're getting this warrant, but they do have time value now, at least for a year, of having an option. And the only cost really to GME is, let's say the stock goes to 40 in a year, they have an opportunity cost of where they could have, in theory, sold shares at 40 and instead they're selling at 32. But that's probably okay.
I think they're reaching that part on the curve where they're like, we don't really need any more cash.
It's 100%.
But let's throw this out to people like, hey, if it hits 32, we'd like a little more cash. But we don't really need it, so we're not going to drop an ATM on you.
This, by the way, is a great strategy for very solvent companies. I've seen a lot of comments, hey, why doesn't AMC do this? Well, they have a different problem in that they don't have shares they can do it. But even without that, it doesn't do a company that's struggling. And it could be, let's not use AMC because we don't want to do that. Let's just use any company. This is a strategy for any company that, hopefully thinks they have some growth to entice people to hold these warrants because they can win. And like I said, the worst thing that happens is they sell stock 50 or 40% over what the market is today a year from now. And if it really goes up, they could sell some more if they want to buy something, go buy a company or something. So it's a nice holder friendly thing that doesn't really cost them any money. They get some nice buzz out of it.
I had a lot of questions over the weekend, yeah, they were related to AMC, but why doesn't, let's just say company XYZ, why don't they do this? If it's non-dilutive, why don't more companies do it? And I think this kind of pivots off what you were just saying. A lot of companies at the point they need to raise cash, they need certainty and they need that cash right away. So you more often see at the market offerings or private placements because they can get all that cash quickly with relative certainty versus if you're doing a rights offering or a warrant dividend, there's uncertainty.
And here's the other thing, and I'm not going to name the YouTuber who's loud and obnoxious. Nobody in the world, nobody, if the stock 6 months from now goes to 33, should, and maybe they will, maybe some guys don't think it will, should turn around and exercise those and buy the stock at 33. Because even with 6 months left, the time value of that warrant, you have a 6 month at the money option. And I think I maybe have sent this to you, and I'm sorry if I didn't, but I know I put this in the chat to somebody I wanted to think about it. Right now, at the money, a $26 call 6 month GME option was, I think it was right around $4. So what that means is 6 months from now, if GME is at 33 and has 6 months left in the warrant, you'd get that dollar, but you still would have $4 worth of premium. Just, it's going to be a little different, but based on what optionality value is right now with the volatility, why would you ever give up $4?
I don't get it. I don't understand why these people
to buy stock. You never do that.
I don't understand why these people who say they're not giving financial advice are giving financial advice. And I agree with you. Why would you ever exercise when the warrant is going to be performing in lockstep with the stock as it goes up over $32? Like, what is the common sense of exercising? Explain it to me, somebody.
But here's another thing too, and this is, and I've told you, I'm not a GME hater. It just, the price has gotten away. I had a buy or limit order in at 21 something for a long time, and it got down. I think I had it lower, like 20 and a half. I didn't really want to own it, so I had kind of a low ball offer. It got to what, 21.
You were trying to beat me on your entry point.
I think, thanks, Tony. I think you cost me money because I wanted to. I had like a 2075 limit order in or something. It got down to 2110 or 15, and then went down there. And I didn't get filled. You did. Well, then when it went up to like 22 something, I think I moved it up to 21 and a half or something like that. Well, for me, the discipline is this is a trade for me. I don't really want to sit on this for 3 years because it doesn't matter that I think maybe it's a little overvalued. That's not even the argument. My discipline is I have a price I want to buy it. It didn't get there, so I'll go do something else, And trust me, if it something happens and it goes down in October from all this, it gets convoluted and it tanks, and it doesn't have to be 21. If it gets back down to 22, I'd probably take a.
I think I'm a speculative trader. You know, I like value stocks, but I like speculative trades, but I do manage my risk. I think you are even more risk averse than I am.
I know there's, and that's partially, I laugh because, I mean, I've never asked you how old you are, but I'm sure I'm older than you. I'm 60, so.
I'm close. I got you by several years.
Over or under?
Younger.
Well, that's what I'm saying. So anyway, so I've been, and again, I'm not a stock trader, I'm a bond guy, but this is in the speculative bucket. Part of it's a good and bad thing for me is running a portfolio of credit. I'm restricted from owning any individual stocks of any credit we have or any customers of ours. And I can tell you, because it's not a big, it wouldn't divulge who I work for, but you know, our customers are Amazon and Microsoft and Apple and those guys. Well, I can't own any of those stocks. Now I can own ETFs. 90% of my stock holdings are in my IRA or ETFs because I can own those, but it doesn't leave a lot for me. You know, when I'm going to take a shot on something, I really want to get it at my price. I mean, and if it doesn't get there, I'll go find something else to trade, I guess.
The reason I mentioned, you know, our individual risk tolerances is maybe, you know, I bought in, you can see on my screen here, 2161. You might have wanted a lower entry because you want to lower your risk. The better entry you can get, the less risk you're taking if there was some unforeseen bad news, right? God forbid.
Yeah, and sometimes, like I said, you got a really good low fill. I would have loved to have gotten filled at 2075 and beaten you, but it just didn't work that way. But the discipline, and this should be true for everybody watching you or just trying to trade stuff yourself, is the best thing I ever heard from anybody, and I'll even say his name because he's probably close to retire, is Tom Carney from Wally Weiss, and was a client of mine forever on the bond side. Now, he also runs the value portfolio for them. He was always happy to miss shares if it didn't get to his level. And I couldn't quite figure that out because then it would go up and everything. But he's just like, that's the discipline of not, first of all, not paying too much for something, but also not getting into a situation where something switches on you real fast. You paid too much for it.
Well, like you were saying, if you miss one ticker, there's literally thousands of others out there. It's just, you know, what I do, Sparky, is I'll start getting entries at my first price point. And if I was wrong and it keeps going down and my DD has not changed, when it drops about 10%, I will add more, maybe even double my first purchase.
Well, and that's actually a good thing. And the one that is a very similar thing, and it's interesting because it was, you know, an arcade stock, was Chewy. Chewy was one, remember when that tanked, I think it was a year ago, maybe even more. That was one I did a real good job of buying and scaling down. And then my bottom orders didn't get filled, but I had a real nice average. And I think I sold that for, you know, started selling them at a 50% gain, and I'm out of it now. I think I sold my last year for over 100% gain. But that was a trade for me. You know, so that was one that I got in, and GME just was one I didn't. So
let me ask you about some crazy talk that I see out there on social media. I'm hearing people talking as if GameStop already has $11 billion in the bank. Are you hearing any of that? Are you seeing any of that?
I hear that not just from my favorite guy, but a couple other people. Here's what the problem is with that.
Why do people lie to themselves like that, Sparky?
Well, the problem with it doesn't, I don't know why they do, because it doesn't do them any good. Again, especially when a stock's at 25 and it's at, you know, the strike's at 32, you never count your chickens before they hatch. I'm sure that's true in Texas, but why? That's not even a consideration.
I don't know if it's a sign of mental illness or lack of integrity, but to go out and tell people that the company already has 11 billion, like, that is that's non-factual.
And what's worse with that is I've heard one or two of them say, hey, when you get these warrants, you want to help the price, you want to run it up, go exercise them and buy it at 32 because the price will go up to 32 then. No, it won't. It's at 26. It's not going to go to 32 because you know, trust me, the company's going to go, Okay. You want shares at 32? Okay, here you go.
Yeah, they already told you that the purpose they're doing it is to raise money. Like they will say thank you and take your 32 bucks. But
my guess is for retail protection, if you went to your broker and said you want to exercise them and you're even $1 out of the money, I'm guessing they wouldn't let you.
I would just ask you to do the math when you get to that point and tell me that exercising is a better math than selling the warrant.
Well, and you made this point. Like I said, I only saw, unfortunately, a couple minutes of your video you did earlier that I was working, and it's the same thing. Let's say, okay, the stock has run up basically to 26 now. You get the warrants on the 7th or whenever you get them, and they're free to trade, and they're worth $4. Let's just use that as a number. And let's say the stock is still at 27. If you want to buy the stock right now, sell the warrant and go buy the stock, and your cost basis is 23.
I know. I don't get it. Like, why would you wait for it to run up to 32 to go buy 100 or 1,000 shares when you could buy them today at 25?
And by the way, that warrant is still out there, so you're not alleviating pressure on short. I'm saying the warrant doesn't go away when you sell it and do that. You bought shares, so you're putting whatever pressure you have on the price because you're actually buying real shares, and the warrant's still out there.
Ruby, how you doing this evening? I think Sparky, some of these people are just their narrative is designed around how can I help GameStop make another 1.9 billion. Let me lie to all my followers and tell them exercise and hold is the best strategy. Guys, I'm just going to tell you, if you're listening to that, start doing the math now. Start learning how warrants are priced relative to the stock. It's going to go up dollar for dollar with the stock over 32 bucks. You're probably, the math is probably going to be exactly the same at 35. The gain you're going to make on the stock versus the warrants is going to be the same, probably more on the warrants because you got time and volatility added.
What I was going to say is you're gaining if you go buy the stock, the reason your cost value is 23 is you're selling somebody else that time value. You're taking it. In one thing, and again, I use the example I think when I sent this to you, is you have to remember on a warrant that's a year, that's a leap option, you're going to lose, and just for an easy number, let's say the warrant is worth 6. The stock's at 27 or 28 when they price it, and it comes out at $6. You're going to lose a half a point every month on the time value of that. It bleeds away. It's exactly what you're talking about, and that's not a bad thing, but it doesn't stay there. The closer you get to the warrant time, the more the only thing you get with the stock at 33 is the dollar from 32.
I think Sparky, if someone's desperate for cash and they need some money, hey, you could sell the warrants right away. If you're stuck, like if you've been complaining about Ryan Cohen for the last 2 years, not letting the stock run up, well, I mean, you could sell the warrants right away. I think what will happen, Sparky, though, is a lot of people will just sit on them for damn near a year.
It's free. There's no reason not to.
Right. Why not?
What I would do.
That's what I would do too. Why not? Because if it runs up for any reason, GameStop has any good news, if they have better quarters than expected, those warrants could shoot up in value. So just let them sit. Why not?
Something goofy like in here, I don't know if you want to talk about this, but I'll just say it for a second. Let's say Roy and Kitty actually post something, and he's not just logging into an X account that he hasn't used in 4 years, and everybody gets excited about that. But first of all, I'll explain that in a second. But let's say it runs up to 40 or something. If you have the warrant, you can probably then go sell it for $10 or something.
Yeah.
And you can do that and take the gain without having to actually, let's say you have your shares in a taxable account, without having to actually take a gain on the shares, and now you don't have any shares. You're taking a gain, at least on a price, significant gain on basically 10% of your position.
The other thing that I hear people telling people to do already, Sparky, which is just like blowing my mind that people are out there giving this advice. They're saying, if the price runs up to 50, sell some of your GameStop with a lower cost average and take that money and then exercise the warrants. I'm like,
That's like the worst thing you could possibly. You're if you sell your shares to have a gain, to then go pay more for something because you exercise a warrant, you just created a gain. You're paying tax on it to buy shares at a higher price. That's what I'm saying. You should do the exact opposite. You should sell
it just blows my mind, the advice being given out. Not to mention, Sparky, if you were to do that, it's gonna be entertaining to watch. But if you were to do that, you sell your shares, then you say you want to exercise the warrants. What is your motivation for exercising the warrants? Like,
yeah, you don't get the premium off. Hey, hang on 1 second. Hey, baby, you want to go see me? You can see me on YouTube. This is my honey. She's absolutely gorgeous.
What are you doing?
I'm on a call. I'm on a YouTube call.
I hope
so I'll tell you a little bit, okay? But everybody got to see you. You're beautiful.
I hope that I'm going to mute him for a second. I hope that some of you guys have competent tax advisors you can talk to, because there is just some crazy advice being given out on YouTube and social media about what to do with these warrants. I'm not going to tell you what to do. I'm just going to say, I hope you can do the math yourself. There's some really bad advice being handed out, and I pray to the gods, both old and new, that you have somebody competent, independent, not on social media, that you can go ask, what would be the best strategy for me?
I think the thing to remember too is you can use your own head and just say, does this make sense for me to do?
I don't know that everybody's capable of doing that, because I see them rah-rahing these stupid theories being pushed out by people already. People that clearly don't understand warrants or how they're priced, or they're not tax advisors. Like, it's ridiculous.
Well, like I said, it's what you got from this is for probably some nominal small amount of discount in the stock. You got a year option, which everybody that does options at all, or even doesn't, knows how expensive they are. You just got it handed to you. Just trade it, hold on to it, do whatever.
Sparky, let's move on to another topic. Some of the other crazy shit that I hear people talking about out there, they're saying, what if the shorts are not the bondholders? What if all the bondholders are GameStop bulls and they haven't shorted a damn share? That means we got 66 million people betting against GameStop, and they're going to be in trouble because they're not getting the warrants. What would you say, as a bond trader yourself, what is the probability that no shorts are bondholders of 66 million?
It's 0.
0% probability.
I mean, that's the only... And again,
why would someone float a ridiculous theory like that? Do you think it's ignorance? They like to hear themselves talk. They're saying what they need to for clicks, or just lack of integrity? Why would someone say that?
It's probably a little of all of that. And the thing people need to remember, and again, the reason, I remember there was a lot of videos about this early, the reason GameStop was able to price 0 coupon, convertible bonds, was because they're generally considered a investment grade, probably Baa1, maybe even in weak A credit, which is good in the convert world, because you look at a lot of issuers or junk stuff, because this is all they can do. So there isn't much risk premium, and they're the entire reason they're able to get 4 billion of these sold at 0% is the buyers, the arbitrage guys, don't feel like they need to cushion the cash flow to protect them against the credit. You know what I'm saying? And again, just use AMC was a 6% bond for 5 years or 6 years or whatever. Well, that means they had cash flow basically 30% of the principal, as long as, no matter what the stock did, as long as the bond doesn't default, they got 30% cushion in there. Well, GMA didn't have to do that because they're good credit and they have a bunch of cash, and these are made just for trading. The reason they sold 4 billion of them is just the ARB guys and hedges, and everybody's going to have little different strategies on this. There's going to be a lot of stock shorting, but they're probably playing options. They're going now they're going to trade the warrants.
I don't know why this concept, it's so basic to bond trading. People don't want to accept it because it doesn't fit the narrative they're trying to push. I get that, but man, these people are misleading so many folks.
Well, and it's too bad because I think, and again, I'm not in it because it just didn't get cheap enough for me, but I think it's an interesting enough story and a potentially, like I said, even though I kind of chide some of these guys in the comment sections, it's an interesting, potentially really good story enough that they shouldn't.
Exactly. GameStop itself with $9 billion in cash, 8.7, whatever, and the potential of a news announcement that they're going to do something with that, or even just look, hey, I'm going to say it, Roaring Kitty coming back. There is literally anything could kick this thing off. You don't need to lie to people and tell them that the bondholders are not short. That is just not reality.
Can I, not to go too far off topic, can I give you my theory of Roaring Kitty currently?
Yes, and then then we're going to take John's question. Go ahead with your theory.
I think there is absolutely zero chance Roaring Kitty shows up and does Twitter posts. Certainly not going to do a bunch of memes or any of this stuff. I would like to think here's a guy that was smart, and especially when he was doing his videos early, was laying out very methodically why he thought it was undervalued and did all this stuff. At this point, he's made $100 million or maybe more than $100 million. I would like to think he's got a lawyer and good legal advice. I can't believe somebody wouldn't say, whatever you do, don't go do anything that could be at all that could be construed as, trying to insider, push this stock and, influence the stock that would get somebody to come and you lose all your stuff. There's just no
I see what you're saying, and it sounds sensible. However, he came back a year ago, and I would have thought the same thing a year ago, and he came back. So I'm going to humbly disagree with you. I think that if the timing is right and he sees a trade opportunity, he will raise his head again.
Okay, I'll put a caveat on that if he comes back, he's going to come back like he did last time, and it doesn't mean there won't be short-term before. If he's going to come back, it's going to be with, I would think just by his personality, I don't know him at all, but just watching his previous ones, if he has a very methodical answer to, hey, I think it's priced this way for this reason or whatever, but I don't think he's going to come out with as methodical as he was to say, hey, the real value is 60 when it's trading at 25, if that makes sense. So I'll put a caveat on mine. I will acquiesce to you that there is a chance he comes back, but I think if he does, it's going to be very pointed, and it's not going to be with a string of memes from 4 years ago that everybody, for some reason,
well, I mean,
tried, like he's a soothsayer and a magician and a genie.
It was fun times, though. It was fun times. I hope he comes back and does that again. Let's take John's question because I don't know the answer. Maybe you have an idea. Why did GameStop choose $32 exercise price? My presumption it has something to do with the fact that the convertible bond strike price is lower than that, but why 32?
Well, I think it's just, believe it or not, I don't know if there's any magic to that other than it might be somebody that knows convertible rules maybe better than me. I don't think they would do that under the convert price because they might run into getting sued by the convert holder saying, hey, you're going to dump all these shares.
Right.
If you did it, let's say you did it at 27, great, you're going to dump 10% of the float in the, at 27, and I got these converts here.
Right.
So I think that price just, because what's the strike on the highest one? Isn't it like 30? It's 28. What's the other one?
They're both. I don't remember exactly. I have to go back and watch my own videos, but they're like in the $28 range.
Right. Yeah. So I know one is, and I thought maybe the other one was a little higher. But the second one was a little higher, but we're still like what, 28, 29. I think it's 100% what you're saying, that if you price it there, it does two things. First of all, it's a nice round number. I think it was roughly 50% at the time. If the stock's at 22 or whatever it is when they probably dreamed this up, they're basically saying, okay, in 3 years, and again, they have a 28 put and a call on them, so it's really a 3-year bond, not a 7-year bond or whatever it is. I'm sure they said, okay, we're willing to lock into selling shares up 40 or 50% from the current price, and if it's higher than that, it's higher than that, but we're happy with that. But I think the bigger thing is they probably had to make sure they cleared the convert price because they might legally have a the bondholders might not like that. And that leads me into a next question, and I'm gonna say a statement, and I want you to say agree or disagree, and then you can expand on your thought.
if GameStop were to run up to 32, 35, 40 in October, just as an example, my statement is 0 bondholders will convert. Agree or disagree, Sparky?
Agree for the exact same reason. Why would you give up enormous time value for the next 3 years just to...
But Sparky, I hear on social media and YouTube that they want those shares. They want those shares, Sparky.
All right. This is not going to make YouTubers happy, but nobody, no short. There aren't trillions of fake shorts. FTDs, which aren't fake, have been 1,000 to a couple thousand for 2 months. There's plenty of shares that can be borrowed and delivered. The cost to borrow is under 0.5%. That nobody is looking for real shares. They're just not.
But they want the shares because they want to ride with Ryan Cohen.
Well, then they can buy the warrants when they're free to trade at $3, $4, $5, and they can ride to them with a lot more leverage than owning the stock.
The problem that these guys will not talk about, Sparky, is that makes 0 sense that they want the shares immediately, because I'll give you a couple reasons. And again, you can say agree or disagree. My couple reasons why they will not convert early. Number one, it rarely happens.
Right.
We looked at Cinemark where they were trading at 2x the exercise price. Nobody converted.
No.
Number two, if they convert early, they lose out on potentially years of making money trading volatility.
I didn't even think about that, but that's an enormous reason arbitrage funds exist. Is
right. Why would you exercise early and miss out on 3-4 more years of volatility trading?
Then you got to go find another name with the.
It's a stupid premise to tell people these guys want the shares. They don't fucking care. And number three, why would they not exercise early? Because they're giving up all the time premium. This is another thing these knuckleheads can't understand on YouTube. These guys have a lot of time premium.
And it's the same with the warrants. Like I said, if the warrants at $4 or $5 and you want to buy the stock and whatever it's at, if it's at 26 like it is now, sell the warrants, go buy stock at 26, take whatever premium it is, it reduces your cost. Those warrants won't go away. None of these warrants, even if it's above 32, are going to get exercised till they expire. Because even with 2 weeks left, there's still some time.
All right, let's forget about retail traders for 1 second. And I already did a little research on this, but I want to hear your, as a finance guy, agree or disagree. It makes little to no sense if the share price is close to, I don't know how you define close to, but let's say 33, 34. It makes almost no sense to exercise to capture a couple dollars profit. It makes more sense the higher that or even to sell the warrants, but it makes more sense the higher the price goes above the exercise price.
I think it makes more sense the closer you get to expiration, so I'm going to throw that at you.
All right, that's fair.
Let's say you have a month or 2 weeks, whatever, before expiration. That, again, because you have the decay in the option value, I can see you, if you want the shares with a month to go, even if they're trading at parity, the stock's at 40, the option of a 32 call is, or actually at this point be like a 40 call trades for 50 cents or something, and the warrant's worth $8.50, so it's parity. If you didn't do anything, I can see somebody with less than a month to go saying, I want the shares at $32. But it's only because the option value is small enough that if they're going to buy shares anyway, they don't want to wait till the end of the month, because maybe there's always a chance. Here's the thing: I guess there's a chance something happens and it goes under 32. Well, then if you waited, you would have bought them cheaper. Even though your warrant went to 0, you would have bought them cheaper. And if the stock goes up, if you didn't sell the warrants, you still have the warrant. So I'd be honest with you, I can't think of a reason why you would not hold the warrant until the very end.
Before I ask my next question, I want to insert my commercial for people that are just joining in. My commercial is all of this talk, guys. Look, I'm bullish on GameStop, probably way more than Sparky. He's a bond trader by profession. He doesn't trade GameStop bonds, no, but the reason that we're having this conversation is I truly want you guys to understand what the bond traders are thinking, because there is so much fucking misinformation on social media. People spin things to a narrative that suits their talking points that aren't grounded in any sort of reality. And the conversation and the back and forth we're having tonight is in no way telling you that GameStop can't run up, that you won't make a lot of money with your warrants. You probably will. I think there's a good probability GameStop runs up either through FOMO or Roaring Kitty coming back, or Ryan Cohen having a good announcement about what he's going to do with the cash. I'm bullish on GameStop, but that doesn't prevent me from trying to have a good educational talk with you guys and with professionals, so you can kind of sort through the messaging that's out there and then do your own DD. Take what we're telling you and run it through ChatGPT or Grok. We're talking about the very basics of convertible bond trading, convertible bond hedging, and everything else you're hearing on social media is made up nonsense. It's based on hopes and dreams. There's very little reality in what these other people are telling you.
Well, the thing that drives me nuts, and again, I know I was messaging you saying, oh, God, I opened my mouth and went after somebody on Twitter or something, is the problem is a lot of these guys aren't getting their information from Reddit or Twitter, where that's, professional bond, stock traders are not posting on Reddit. I mean, they're not. It's guys trying to get feel good by having a bunch of people agree with them that the thing's going to the moon. That you got to be really careful about what you see on any social media. Really, it just isn't. It's just biased. That's all it is.
I think there's a lot of profit opportunity for intelligent traders in GameStop. It's a high volatility stock. That's what attracts me to it. Even though I call it speculative because I need a couple more data points. It's looking better after Q2, but we'd like to see 4 data points, 4 quarterly beats on revenue and earnings. Before the market is like, okay, well, they really turned the corner. I think the narrative will change as more data points come in, and it's okay for you to be bullish ahead of that. That's not a problem. But the next question I had for you, Sparky, is you hear on social media that the reason the bondholders bought these bonds is because they want to buy GameStop at $28, $29. This is how ridiculous the spin
They want to buy it at $28, $29, but yet it was at 22 or something after they announced the deal.
Right? Excuse me, but
yeah, this entire deal worked. And these deals don't just, GameStop doesn't wake up one morning and say, oh, hey, we're going to go price a 0 with 7 years and a 3-year put and this amount of premium in it. I mean, when they talk about doing this with their banker, and I don't know who it was, I don't know who the underwriter of this deal was, they go and they talk to the big players, and it is in a bubble. I mean, most of these guys, when you're doing these pre-deal stuff, and I, in my former life, was involved in a lot of placing and pricing, not convertibles, but just debt, just corporate debt. These guys all have NDAs, and I'm talking about the couple people, the big enough players to price a deal. They're going and working the math and figuring out where they could price $1 billion or $2 billion or whatever they're doing to get this done. And it's these bonds are fashioned for trade. It's great for GameStop. I mean, the worst thing that happens to GameStop is the price goes to 50. They have to sell shares at 28, but they get to erase the $4 billion from their books in debt.
Or the worst other thing that could happen is volatility dries up and they get the bonds put back to them in 2028.
And I think and again, I'm not, I'm not sore I'm not in it. I don't wish GameStop bad at all. I wish I would have bought it at 21, but you can't go back and do that. It's important not to chase it to me, but this is okay. Let's say in the next 3 years, GameStop can't do anything with the money. They just can't find something that's worth buying. I don't think that's going to happen.
I don't think that's going to happen either. But let's roll with your example. Go ahead.
What's going to happen in 28 if the stock is still even if it's at 30 or something in 3 years, they're going to know this deal is probably going to get put back by the bondholders, because at this point there won't be any juice left in it. It'll be trading close to par. Well, they'll probably start working on another deal, whether it's a convert or something else. They have to replace it. I'm guessing if they have the cash, I suppose they can pay it out, but they really don't want to give up the cash if they still have potential, think they can buy something. So they'll just be another deal, and it'll be structured the same, and maybe the strike will be 40 for 5 years or something. They'll just do another one. You know, they don't. The participants in this are going to get, the more it goes sideways, they're going to get tired of it. They're going to want their money back. They're going to want to do something else, and it might be a new GameStop deal, or they'll go find something else. But GME has to be conscious of that too, that they know, okay, in 3 years, if we don't do anything with this, or maybe they spend it on something, and whatever they spend it on, you have a recession or something, the stock goes up, they have to pay it back. They don't get to magically not pay it back if the stock's not over the strike. They have to pay it back.
The most ridiculous thing about this narrative that these guys can't wait to own the shares at 28 or 29 is you have to throw out every basics of Bond Traders 101. You've got to throw all that out the window and say these guys will exercise early. I'm going to guess, Sparky, there's a very high probability that we're going to be having this conversation right at the maturity date that these guys are finally going to take the shares. That's years from now. It's not going to happen next month, even if it runs to 40.
It's the same conversation we had with CNK, where the bonds were trading over $200 price for a 100-face bond. It was way in the money, and even then, you know, I'm curious to see, and I know we talked about, to see what, and we know the short interest has already dropped off a cliff, but my guess is the next report, and maybe even the one following that, it'll probably go down to almost zero, because this play will be played out.
I just feel bad for the people listening to other YouTube channels and this nonsense information they're putting out. They will never have a bond trader on their channel to help educate people, because it will completely blow up the narrative they're spinning, the made up story that these bond traders are itching to get these shares next month at $28. It is ridiculous. It flies in the face of any bond basics. Just no, hard stop.
The thing that aggravates me about it, and the only reason I open my mouth and comment on some people's stuff, not necessarily in a positive way, I'm always polite, but there's a lot of good things you can talk about this whole story. And
exactly.
None of them have to do with MOAS, and I think people get impatient because they're at a point right now, even especially now with this warrants, it's interesting to talk about, and until they go buy a business or develop a business or do something, it's just going to be a quiet period where there's not going to be a whole lot of excitement.
But as you said, there's so many good things, especially even with the Q2 results. Like, why are these people making up shit? Talk about the real shit. $9 billion, great. Revenue increased. It's a beat, great. SG&A going down. That is enough of a story right there. And I said this and I meant it this weekend. You might not be bullish enough on GameStop, you guys, because if you just look at those things and you're willing to speculate a little bit, this thing has the potential to get a solid pop on some news.
Well, what for me, what's interesting, and like I said, I missed it and is sitting on the sidelines. For me, the next quarter, and again, it's 3 months from now, I would love to see what the actual numbers come back from this website thing. I can't remember what they call it.
Power packs.
Power pack. I mean, this is a great buzzy thing. It's got all sorts of stuff going back in and out. I would love to see, and again, this is a problem, and I know you've hit on this too, with their reluctance to have conference calls or take questions or any of this stuff. I think that's actually a hindrance to the story being relayed and being better. I would love to know 3 months from now, after this thing's been running for a couple months, it should, especially with the volume they're doing, it should show great numbers. I mean, that would be something for me where I'd say, okay, even though the stock's at 24, 25, 26, and I really didn't want to pay over 20 for it, but here's something they started that's a growing business that if they need to throw $1 billion or $2 billion of capital in it to make it better or hold more inventory or whatever they think that, expand it to sports and other things or something. It really
shifts the story, because then you're getting away from brick and mortar, lower margin items, and you're You're concentrating on an online business that is high margin.
Well,
I love the Power Pack story.
No, that's what I'm saying. But for me, I want to wait a couple months and see if there's.
Well, yeah, of course. A sensible
but
person would want to wait, but I mean, it isn't even launched yet.
But here, and I'll go after again a couple of the guys that are all excited about 350 million in interest income for the year. That's a 3.5 or whatever the number is. I say somewhere between 3.5% or 4% return on capital. That's not an acceptable return on equity capital. I mean, because you've been in that side of the business. They get
enamored with a number, and they're not looking at ROIC or ROA or ROE, which is why I keep hammering on that shit.
But that's what, to me, that would be more exciting. If they came back and in 3 months and said, hey, this thing is now doing, we did I don't know what number is too big, but let's say we did 500 million just on this website, and our return on it was 20 or 22%, whatever it is. And everybody quotes, it drives me crazy because they're quoting GameStop's grain margins. Yeah, but they're throwing in the interest. They're not putting the margin on what their actual business is. But if they came out and said, hey, this is now its own little company, its own little operation, and they just this thing, we want to make it grow. We're going to put capital on it so we have more inventory. We can expand it into different products, whatever we're going to trade on this. And our return on that, our return on the capital in there right now is 20 or 25 or whatever it is. Then you start getting a premium, a growth premium for your stock.
Yep.
Cash is not a business. I always say that in the comments.
I know it's really hard
but cash is not a business. It's a great cushion. It's nice to have, but it's not a business model.
And 4% return is not attractive to big Wall Street money.
But it shouldn't be attracted to. If you want 3.5 or 4%, you can go put money in a CD right now. And
if I had one wish, Sparky, it would be that I could take that knowledge and pop it in these other YouTubers' brains. But they never took a finance class. They never took an accounting class. Half of them never went to college, and they don't understand that nobody fucking cares about cash earning 4%. They just don't. But if that cash is invested, boy, the story could change. So talk about that. That's what I talk about, Sparky. I don't talk about the cash because it's only potential. They even get mad at me for saying that. How dare he say it's only potential? Because nobody except you care.
You don't get a multiple. You don't get a risk premium, a futures earning premium on cash. And like I said, this to me seems like, because I have kids like you, and they, they're in their late 20s and 30s now.
You have kids like me. I'm not in my late 20s.
No, but I'm just saying, I have kids. I have two boys that traded Pokemon cards and had it. And trust me, I ask them every day, did you find a shoebox full of this stuff in your closet once in a while? Because I think some of these old ones are worth a lot of money. Because my younger one actually called me and said, is there any chance you have any of this stuff? And I found two. It was some old sports cards. It wasn't Pokemon or anything. But I think literally 20 years ago, whenever that first started, the kids were putting them in the spokes of their wheels of their bikes to make noise. I mean, it's just because you could buy a pack for $2 or something, and they kept the ones they wanted, and the other ones they just
Imagine, Sparky, if I still had the boxes full of sports trading cards I did from the 70s.
And I have an older brother that had just meticulous collection, and so that would have been probably the 70s because he's older than I am. So I mean. And you just didn't keep that stuff, and you don't know what it'll be.
You didn't think like that. You were a kid. I mean,
but again, my point is if this thing takes off and they can expand it to where, the key is that I don't know who they hire or what they use to properly value any of this stuff. I mean, I don't know. There's 1,000 little card shops. We got a couple here, and by me in town, and I think they probably scrape to get by is my guess. They sell some merchandise that's probably marked up, and maybe they buy a card for 50, try to sell it for 200, whatever it is. I mean, the bigger this thing gets, the more of those people that can kind of test the value and correctly price stuff you're going to need. But
there's high volume. There's a high volume of sales on eBay where you can get a valuation for these things.
No, but that's what I'm saying. I think the next thing they'll do is if this thing grows, they should spend some of that cash to go find the people that are doing the valuations or do a deal with eBay if they have to pay for it to get this information,
or buy PSA. The
that
people.
That's possible, but I personally think you're better off having PSA be separate, because in essence, if you buy them and they're grading stuff you're selling, that to me is not very arm's length. And I think you lose the credibility of what PSA is. I think
the ultimate funny thing about that, though, Sparky, is PSA is owned by private equity. Some of the most vile enemies of the GameStop YouTubers. It would be hilarious if GameStop got in bed. Hey, here, Mr. Private Equity, we're going to give you a walk away. Here's your hundreds of millions of profits. Thank you very much.
In PSA charges for they don't buy and sell cards. They just charge to grade them and send them back to you, right? I mean,
right.
I don't think it does them any good. In fact, I think it hurts their model to buy them. They want them out there because that's their valuation point. And if they buy them, well, everything's a PSA 10 if they own them that they're showing in their stores. So that's not, I don't think, what they need. But my point is, if there's, whether it's Amazon or whoever is actually trading these things away from them, even if they have to pay for it, they said that's who you want to set up an agreement with, is somebody that is outside your universe, trading cards and generating what prices stuff is being bought and sold for. GameStop should be willing to pay a decent amount of money for that, because that's like any other market. I mean, all they're doing is making a new market out of things. Yep. If you have that information, it also validates what you're selling your cards for. If you can go say, hey, these traded on eBay here, they traded 4 times in the last month, and here's the 6 prices they traded at.
Let's run through some questions here that are stacking up in the chat. I'm going to go in backwards order, with PB being last, because I think we can knock out the other 2 quickly. The Spiz says, what is the business plan of the website? I think he's talking about Power Packs, and it's basically an online website where you can buy digital trading cards.
Or real ones, yeah.
Right. I mean, they're a digital representation of a real card. And you can instantly open it online, and then you can either vault it, save it, sell it on eBay, sell it back to GameStop. It's a way for GameStop to generate revenue and generate some profits. I think we could do some interesting margin analysis, looking at the odds and looking at the type of cards. Someone spends $25, sometimes they have a small chance of getting a card worth over $25, but a lot of times they get a card worth $9. That's if they turn and sell it back to GameStop, that's a high margin win for GameStop.
No, that's what I think I started our conversation with earlier. Is it's the gamification of this is fantastic for GameStop right now. At some point, consumers. If they lose more than they win,
it will appeal to a gambler. It'll appeal to the gambling motivated people, but normal people, if you lose enough times, you're going to stop doing it.
That's why I want to wait. If 3 months, 6 months from now, this thing is growing and still going strong, I'll buy GameStop at 30 versus 25.
Right.
It's like that's a real business. That's what I think some people miss. It's great to get in and speculate on the front end of that, but if you think the thing's going to quintuple in value in 5 years or 2 years, it's okay to pay 40% more for the stock if you have some validation that the business works. I'd rather do that. I know it's a little more conservative than you probably are, but to me, that makes a lot of that. That's probably just because I'm a bond guy.
SP Narwhal says the Power Pack website is big with streamers, or will be donations. I'd sit here and open Power Packs all day if I had super chats. Why not? I mean, if it's risk-free, it's risk-free to a streamer. When people are donating money, you're just spending someone else's money. Why not?
But see, again, I don't want to call it a risk, but for me, I want to see in 6 months from now, and my guess is streamers ripping stuff open and doing super chats. 6 months from now, that portion of this business might not, even if it's still there, it might not be anywhere near the excitement level.
We will see. I remember when CandyCon controllers were going to save GameStop, and that it's all anybody talked about, and now nobody cares.
Yeah,
Power packs is a lot more appealing to me. We will see. I'm kind of in the same boat with you, Sparky. Like I'm very excited about it, but we need to see some data.
See, to me, it's not even just opening and selling, doing virtual cards. It's the potentially of a platform where people could buy and sell and trade and deliver real cards. I mean, you have the infrastructure there. I think you can add to it, especially with the money they have and the capital to include a lot of different things in there. It doesn't mean I hear, and you've heard this too, that GameStop's going to be the next Amazon or eBay because they're doing this. Well, I think that's pretty bold, but they certainly have the opportunity to find some niches in a platform that a lot of eyeballs look at. But, that's what I think would be cool. Like I said, I'm not ready quite to jump into it yet. But
Sparky, Tyler says, Tony, you're an idiot. I've been buying for 2 years. Your education sucks and you suck. Tyler, I hope you feel better, friend. I hope you feel better. I guess you like getting lied to by people that will not have a bond trader on their channel to explain to you how convertible bonds work. Look, there's other channels to go listen to, Tyler, if you want someone to whisper sweet nothings and lies and misinformation into your ear. I'm as bullish about GameStop as anybody. I told you guys it was going to go down to around $10. It did. And I've been trading GameStop for several years, unapologetically booking profits. And if what you're doing works for you, Tyler, God bless. Thanks for tuning in tonight.
Well, what I always appreciate, Tony, is I'm obviously a little more conservative, maybe even a little more cynical about some of this stuff. Is you, and you always have me on.
I'm happy to entertain other people's opinions, even people like Tyler. And Tyler, I send you all my best. All right, let's get some other questions here. We got the Spiz question. Chris says, Tony, if you bought GameStop around 21, it's on the screen there, Chris, 2161. I was wondering if you have an exit plan. Normally I have an exit plan selling close to the supply zones, Chris. However, things are, as I've been telling you guys for the last several weeks, getting more bullish than I've ever been on GameStop because we had a great quarter. The Power Packs website hopefully will go live. And now we have, I think people are going to get excited about these warrants, rightfully or wrongfully, I don't know. And
that's why they did them. I mean, they did them to build some excitement, and it's a nice kiss. So,
and more importantly, the underlying bullish reason I have is there's very low. My entry, I think, is very low risk unless the entire market collapses. I'm not worried about losing half my investment. Ryan Cohen's got $9 billion. I'd rather bet on him doing something with the cash. I think my reward potential is higher than my risk. So I'm just going to see what happens. I'm going to see what happens. I'm not in any rush to sell, to answer your question, Chris.
Can I suggest one other thing, just from my point of view, again, as just a general investment person? I think if GameStop goes out and let's say they find a equal size, they find a 10, 11, 12 billion dollar acquisition that makes sense and they do it, them being the buyer, you probably still have an opportunity to get some value. And it doesn't matter what the stock is. It doesn't mean the stock will go down, but if you feel like the acquisition they're making, they may have to put debt out on it. They, probably won't use all their cash. They may issue some shares to pay for it. There's always these components of a large buyout or a merger or something. You may get an opportunity to jump. Like I'm talking about for me, even if the price is higher, if I see value in owning the company that's being acquired or GME that's the acquirer, you have a choice of picking one of those two and going with it also. I think that opportunity is going to exist when they finally pull the trigger. You're going to have a chance to get into it at a reasonable level, just because there's going to be a lot of moving parts and maybe debt and maybe new shares to swap for the shares of the company you're buying or something. So
PB, let's answer his question here. He says, not sure whether this was discussed. Will the convertible bondholders short the stock on the date they receive the warrants? He says my guess is they would like to hedge their position. I mean, you saw the short interest increase and the price get hammered when the bonds were issued. That was them hedging their convertible bonds, and they adjust that hedge on a daily or weekly basis depending on the stock price and volatility. And do I have that essentially correct, Sparky?
You do, and like I mentioned a little bit earlier, and I think it's more likely if they're, don't forget, even that the convert guys may not get to play with more than half of whatever the warrants they get, because half of them are going to go to whoever they sold short
Right.
to already. To me, it would make more sense, and again, I'm not a hedge fund arb guy, but they're going to look at wherever the price of the warrant is when they get them, and they're going to make the decision, okay, this is a 1-year option I'm now holding. Am I going to sell calls against it, hedge it that way? Does that make more sense? Should I hedge and sell in stock? It's a wonderful opportunity. Again, just like we talked about, this whole creation of these converts has been phenomenal for these hedge funds, and they're not going to undo it just to take shares for the same reason. I'm not sure they sell the warrants, or I think they're going to play with those because they're probably going to have some volatility. They've got a long date, being a year out, so.
All I know, Sparky, is I'm not smart enough to tell anybody what is likely to happen with the warrants. I would say.
I think you're going to have, I don't know how many people are going to get them, but the thing that's fun and what makes markets is there'll probably be 50 different people doing different things with them.
Yeah.
And the culmination of that is going to price where the warrants are and the stocks, and maybe even where the converts are.
I think it is 100% appropriate to be excited about. Nobody knows what the fuck is about to happen.
No, and like I said, I don't know, whatever happens on the first day they're available to trade might not be what happens on
Right.
The same with the stock and the price of the warrants and everything.
I think the uncertainty is going to add some froth to this trade between now and October 7th. And then once they start trading, we'll kind of get a feel for what is going on. But anything could happen, I think, between now and October 7th.
Well, I think the initial battle on the warrants is going to be, I think there's going to be ARBs that have excess warrants, and there are going to be people that need them, and it's going to be a little bit of a battle between the two of them, what price makes sense. And then you have retail in there that has them that, may be buying the things. There might be pressure on the upside, not people selling them. But that's what's going to be fun. It's exactly what you're saying. But the fun will probably last a couple days, and then the real value, all this stuff, I think in a fairly short period of time will settle out to the math. It'll boil down to what the math is on what the warrants are worth and what the stock should be at, and what options look like, and if you hit it right in that period between now and then, you might make a shit ton of money.
I just want to interject. Thank you to all of you supporting the channel. Thank you for watching tonight. I hope you guys are getting something out of this conversation. I know Sparky's mic is a little spotty. Sparky, we're going to encourage you to order go to Best Buy or go to GameStop, go to Amazon, find you a nice, you can get a studio mic for $50. That'll do the trick.
Just for you, I promise you I will invest in a nice mic because you're nice to have me on.
Don't go buy, I forget how much this one costs, but you don't need one of these.
The one I have is from my HR department that the last time it broke, they just handed me a new one out of a big box of them. So I'm guessing it's a $5 camera mic.
Thank you to y'all supporting the channel. Thank you even to the haters. You're welcome here. We appreciate your views. We appreciate your comments. I'm happy to entertain your questions. It doesn't matter to me if you don't like me. It doesn't matter if you don't like education. Look, if you prefer a cult channel, this is not the one for you. We're trying to teach people here. And it might sound shocking to you if you've only listened to the pumpers. But it doesn't mean that I'm any less bullish on the stock. I'm a realist. And I am willing to change my views over time as new data comes in. I do that on every ticker, and GameStop's no exception. There were times where I said it's too early to buy. I've been buying now in the 20s. I've been selling in the 40s and 60s, and I probably will do it again if it runs in the 40s or 60s. One new question from Kenneth. He says, is it the right time to load more GameStop or wait until October 3rd to see which direction it goes? I can't give you any specific advice, Kenneth. What I can tell you is my belief is there's a high probability, I think, that you get some upward momentum in this stock as we get closer to either the ex-dividend date or the distribution date. Just because look at all the excitement, look at all the hype. Even if it's not correct information, this is hot right now.
Yeah, no,
and
as a non-owner, I do agree with that. It would be interesting.
But what happens after that date? I don't know. Again, the one thing that I said on my weekend video that would be cool is if GameStop drops some news about some corporate thing they're doing, an acquisition, an investment, anytime in October or in the next year, that could literally be all you need to kick this thing up into the next level of valuation.
Be interesting. I don't think there would be any news just because they issued this warrant dividend. I don't think they have any blackout. And like, let's say they bought somebody yesterday. I don't think this is just a dividend action. I don't think they have to not say something. Would be my guess.
Well, if they sign a deal, they're going to have to disclose it.
No, but that's what I'm saying. I don't think there would be any. It'd be different. Let's say if they sold shares at the market. I don't think they could do that and come out a week later and say, "Oh, by the way, we bought PFA." I think that would be bad. But I don't think, absent something like that, I don't think they have any restrictions on doing
to address Kenneth's general question, and also, look, I'm looking at a support level, Kenneth, down there at that demand zone, which has been well respected now since June, around $21.50. So, if I was just being pragmatic and saying, would I be willing to buy today at $25? I think your downside risk, I don't think there's really any GameStop specific bad news risk that I'm worried about right now. Other than Ryan Cohen leaving the company, there is general market risk. Like if the market were to crater, GameStop's going to go down, in my opinion. But if I just set aside market risk, because you're not going to avoid that in any stock, and think about what's my risk in GameStop, my risk would be the market decides to trade it down back to $21.50. I don't know. I could live with that if I bought at 25.
And again, I'm the negative Nancy here. I would say your downside is probably 22.5 to 23, just trading wise. Well, no news, no nothing. Just the excitement wears off at some point between now and the.
Well, I was being super negative there, saying like they could trade it back down. I don't think it's likely. I'm telling you, I think this is not a promise. Don't make trading decisions on my opinions. I think that there's more bullish momentum heading into October 3rd, 7th than bearish momentum because of the hype.
Yeah,
and
I would agree with that. And like I said, there are probably plenty of people like me between now and then. If all of a sudden it got down to even 22 or something, that would be a reasonable level for me as a agnostic, way too long to buy stuff level where I would be a buyer. So there's got to be other people besides me that I think would do that too. So
Slave King, what's up? He says, I'm concerned that RC gave too much time for shorts to create and execute a plan. Yeah, let's talk about that, Sparky. I think what he's saying is he gave, 3 weeks heads up to the shorts or to the market about these warrants. This is not a common thing, right? But you typically can't just announce this and say it's going to go in effect in 3 days, right?
Yeah, and only because I'm on the side of actually even now doing public deals like this. They don't, even if they had this all set up a month ago and knew they were going to do this and had all the lawyers in and all this stuff done, you got to get it listed, you got to get exchanges on board. It doesn't happen in 2 days.
Right. There's a lot of market participants, the exchange, the SEC, the OCC. Yeah, everybody's got to
registered but even getting back to the original point about giving the shorts too much time, it doesn't affect, and I'm going to stick with this because it's a big pumper MOAS thing, is it doesn't affect probably 80% of the shorts and maybe more than that. This action doesn't affect them. I mean, it doesn't help them necessarily, but it doesn't hurt them either. So.
Just to recap on that, if you guys weren't here for the earlier discussion, and this is going to be upsetting to some of you, I understand, but I don't talk about multiples of the float being sold and not reported anywhere. I don't talk about GameStop being sold 3x over. Yes, there's swaps. Yes, there could be synthetic positions created through the options chain. Those are perfectly legal. They won't show up in the short interest. There's somebody making a directional bet on how the stock trades. Okay, I agree with you. There's probably synthetics. That's not a replication of the float. Understand what a synthetic share is. It's a fake share created by buying a long call and a long put. It's a synthetic share. It emulates the return on the stock.
Yeah, it's an economic share is what it is.
Right.
It's not anything never had.
So yes, there are synthetic shares. Yes, there are swaps, without a doubt. But what I look at, let me finish this, Sparky, just for Mr. Slave King. What I look at for the short interest is the official short report. I do that for every ticker. And it's 66 million by the last official report. We believe the short interest will go up as the price increases due to bondholder hedging. And all of the bondholders have run up the short interest 40 million shares since March due to their hedging. You can go look at the short interest reports and see this is data you can look at. It went from 28 million to 66 million. And so they're 40, let's say they're 40 million shares short. They need 4 million warrants. They're going to get 14 million warrants.
Yeah.
So there's no, this is what Sparky was saying. I'm giving you a very long answer to explain what he said. There are very few shorts that are worried about this because most of them are going to get warrants from GameStop. And then the remainder, what's their exposure here? What's their exposure? You got a $3 warrant, which is going to give them exposure of 30 cents per share, and they could go in the open market and buy the warrant. I don't really know what are they worried about.
They're not. And the other thing too is you were talking about short interest, and again, believe it or not, that many warrants isn't that much control of stocks. It wouldn't surprise me. You could have the ARB guys are going to take the warrants they have left over that are basically free to them, and I think they should sell calls, but they may short stock against them and just do it in a cycle. Short it when I think it's too high and buy it when it's down and trade it up and down and up and down. I mean, I think this is just another very dynamic tool that they just got handed to trade.
Zachary, how you doing? Zach says, I guess I'll be surprised if GameStop isn't around 32 and the ex-div date is here. That would not surprise me one bit, Zachary.
It could happen.
I would make that bet with you, Zachary. I'm not guaranteeing it, but I think it's a reasonable, it's okay to talk about that. I understand the bears don't even want to entertain that idea, but I would tell you it's not out of the realm of possibility. And
I will throw my spin on it and say it wouldn't surprise me at all, because nothing surprises me anymore, that you have a 1 day euphoric spike up to 32, but I would bet the same amount of money that 2 weeks from now, if that happened, we'd be back.
I would take that bet. I would take that bet with you as well, Sparky.
Right. I will.
No, I mean, I would bet on the same. I'd bet the same card as you.
Okay, I'm sorry. All right.
If there is
if you want that, I can come up with a barbecue bet. You come here. Right?
No, I'm not going to bet against you on that. I think there's a high probability it will spike up, and there's a high probability it will not be a sustainable spike. So,
do you mind if I say one thing about swaps, just because I do have some?
I don't mind a bit. What you got?
People get all crazy about swaps. First of all, they just flat out make up what the exposure is out there because nobody knows. And I actually think this is a problem that the SEC or whoever probably doesn't keep a real good handle on what swaps are outstanding. But you have to remember the reason big institutions and all these hedge funds or whatever, or even legitimate, even Berkshire Hathaway enters swaps is because it's a return for difference. It's just one person betting somebody else for some period of time that the stock is going to be above or below this level. I think every single one of them, both sides are able to exit the swap, and they just have to pay up the difference. And it's not, the reason people do them is they don't ever have to borrow shares. They don't ever have to deliver shares. It's just lets them do a leveraged large bet on price moves without having the inefficiency of buying 10 million shares of something, and then you're right, but then you have to sell 10 million shares and you kill your price.
You skipped right over the most important thing of what you said. They don't need to deliver shares. But
that's why they don't need to borrow or deliver them.
Right. This is the biggest misinformation talked about on social media about these swaps. Oh, they're scared because they're going to have to find shares. No, they're not. No, they're not. A total return swap is a bet on the return. It's not a bet that I'm going to owe you shares. Like, go do some basic DD.
And I would actually agree that this is something that should be more public, and because it's an incredible amount of leverage that's probably out there spread over. I mean, they do it in interest rates and everything else. I think it'd be better for the system if it was disclosed, but the entire reason people do them, and again, it's not just hedgies, it's the Warren Buffetts and all these guys, they look at the value of that swap, and if they think they have an advantage, they'll enter into it because they don't. It's what you do have on that, by the way, is counterparty risk. So
you could still fuck somebody over if GameStop were to run up and someone's on the wrong side of a swap bet. They could still get upside down, right?
Absolutely.
But it doesn't mean that they're going to have to deliver shares. You could you could bankrupt somebody because they made a bad swap bet. I hope they do.
But I always hear people say, "Oh, those guys, the guys on the bad side, are in the market and they're hedging, buying shares." No, they're not. Maybe they're doing another swap. That's the problem with the leverage of it. They're paring down their exposure by. They don't go buy shares that then now they have to. And again, here's the problem, especially with the size most of these are. The reason they're doing it is they just want to book the return, either positive or negative, and they don't want to mess with maybe being right on a trade and not having the liquidity in the market to take their shares, or being wrong on a trade and needing to go buy shares and there aren't any. I mean, that's the entire reason they do this is to not have a MOAS happen in their face, or 20 or 200% cost to borrow. They avoid all that by doing it. The risk they have is if Berkshire does a trade with BlackRock or something, and one of the two of them goes broke, then you're just a creditor, and you don't, even if you're on the right side, you don't get your money without going to court. That's the risk they take doing these things.
Zachary had another good question, and we touched on this briefly this afternoon. He said, couldn't massive amounts of shares be recalled instead of lent out to get the warrants instead of letting someone else get the warrants?
That could happen.
Yeah.
That's one of those things I think we'll have to watch and see if it happens.
I said in this afternoon, for those of you who weren't there, and I know Sparky, you weren't there, and Zachary I don't think was there either, that absolutely could happen. There could be some shorts that just say, I don't want to mess with having to go pay cash in lieu or find warrants in the open market. I just don't want to deal with it between now and October 7th.
Or whatever it is.
There could be shorts that exit the trade, which could be some buying pressure between now and then.
Go back on and go back in after. No, this is
right, and then they go back in.
This is all the amazing stuff that nobody, you or I, or any YouTuber for sure, but even the pros trading this, they're all looking at the risks of this and saying, what do I want to do? Am I a regular short that's going to have to buy warrants, or at least even if he doesn't have to buy them, has to provide cash to his prime broker for whatever the value is. He's looking at this and saying, okay, I'm this much short. I'll owe 10,000, 100,000 warrants or a million warrants. What is my risk analysis of what happens if these go up 20% over what the actual intrinsic value is? What do I lose? And they very well may cover some now or buy some shares now so they have them, or do something different.
The other thing, Sparky, and I don't know how much, I don't think I've ever really talked to you about rehypothecation, but I know everybody has different views on it. Some people say it doesn't exist. I think it exists. And there could be brokers that have lent out the same share multiple times.
You know what? It'll be a good way. You'll find out.
This will be this will be one way, but you know, if that chain exists, this could be an interesting time where some brokers clean up some of their mess ahead of the warrant issuance. It could be, or they could just clean it up by buying the warrant in the open market. Like, I don't know how it's going to play out, but
here's the problem with it, Tony, and this has to do with FTDs and not being fake. If a broker even internally lends out more shares, lends out the same share 3 times, and those people, and they're lending it out to people that are going to short the stock, they think they borrowed it and they short it, and it comes time to deliver, and the shares aren't there, they're going to show up in FTDs, which aren't there right now. You know what I'm saying? Because one of them will get delivered, but the 2 that they lent that they didn't have will turn into FTDs, which aren't fake. That reporting's not fake. It's not self-reported. It's estimated between 2-week periods of time, but it's not fake. But if a broker did that, and again, it doesn't mean they don't do it for small, insignificant shares just because it's easier, especially a smaller broker, they can figure out if I have to in a week, I'll borrow shares or buy them or cover them or something. But on a large scale, I don't think that exists because it would clog the system and you'd see it. No, if somebody has 1 million shares and they lend 1 million to 3 different guys that go and short it, they're going to want those shares they're borrowing actually with them, and they're going to deliver them to whoever they sold them to, and that could be anybody. That could be Goldman, Merrill combination. You know what I'm saying?
yeah.
So if the broker that lent them out all of a sudden doesn't have them, it's going to show up, and I think they'd run into all sorts of audit and you know, they're going to run into problems pretty quick within a couple of days when they can't have them.
Hey, let me ask you as a professional bond trader, how much do you guys worry about regulatory oversight?
Constantly,
exactly. That's the answer. These people think that it's the Wild West out there, and the regulators don't.
The opposite of that.
Yeah, I mean,
opposite of that.
I've had friends that have owned brokerage firms that got put out of business by the SEC, and they complain. I'd love to have him on as a guest one time, but the amount of oversight from the SEC crushed his business. I know that the big guys doing stuff on high volume get away with a lot of stuff. I get it.
No, and Tony, I agree with you. I think they get away with stuff, but on a very short couple-day period. Does that make sense? That's a big difference between, in other words, if maybe they fail to deliver something for a couple of days, but they know they're just in volume, they're going to catch up with it, and they think, it just makes it easier for them to do. First of all, those guys the examiners, when they come in, and for broker dealers, they come in a couple times a year and they look at that. They look for that to make sure. They look at your fails. Even me, trading fixed income, if I have a fail and we don't self-clear, we clear through a third party. The broker, if somebody fails to deliver them, first of all, our clearing agent is calling me, even in the middle of the day that it says, say, hey, we're due these shares, we haven't seen them, could you call the guy and check? And by the second or third day, they're almost demanding that, tell your broker we have to get this cleaned up because it's a fail, it's a fail, and they can go borrow them. So and that's long before you get to the regulatory thing. And on top of that, like I said, brokers are so unbelievably, and I'm guessing hedge funds are too. I've never worked for a hedge fund, but I'm guessing they have people on their rear. And it doesn't mean, again, they can't fudge and get in the gray for a couple days, but they can't make it short something for a month and not have some regulator coming in, or by the way, their prime broker, whoever it is, because they'll be in trouble saying, hey, you sold us these shares, you didn't borrow them.
Well, let's have a different day discussion about FTDs, because I could talk about that for hours. I want to get to some of these other questions.
Okay, I went on.
No, I mean, it's good stuff. I agree with a lot of what you're saying. I wanted to hear your quick answer about, do you guys worry about regulatory? And the answer is yes. If you're trading bonds or stocks, you're worried about regulatory.
And we get checked and audited and asked to provide information to our oversight all the time, constantly.
Chris says maybe Ryan Cohen is being gracious and giving the ones who decided to short GameStop an opportunity to switch to long before they absolutely get wrecked. I mean, I kind of like that theory, Chris. Maybe with the 3 weeks, they have time to think about all the evil things they've done and at least close out their short position. I like that theory, Chris, but I also think that if they are worried about it and they're closing out their short so they don't got to mess with figuring out how they're going to deliver warrants or they don't want to pay the money, I think that once the warrants are delivered, it's easy enough for them to come back in short.
Yeah,
and they might even be in a better position to reestablish their short at 32 if it runs up.
Well, but forget that. Let's just talk again about a dividend, what it normally does to the price, Tony. It should go down by 1/10 of whatever the warrants are worth. If it doesn't, if retail FOMO runs it up, which it very well might for a couple weeks, all you're doing is, the guys with the pointy hats and the calculators are going to look at that and say, hey, this is out of whack. We can buy the warrants or buy converts and short the stock because mathematically it makes.
That's what I'm worried about. I'm worried about people getting so caught up in the FOMO. If there's news from the company, that's a different thing. But if it's just running up on FOMO, all you're doing is building the incentive for the shorts to come in and smash it.
Well, and like I said, it wouldn't surprise me if any of these hedgies don't sell a single warrant the first day or two they trade, because I think retail, if they're going to iron hand them like everybody talks, what do they call them? Iron hand? I don't remember what that is. Something they're going to hang on to them, maybe even buy some more because they're running up and everybody gets excited about them. At some point, they're going to get to a level that whatever warrants they don't need, it's going to make sense to either short stock, short options, or just sell them.
I just want to say, Sparky, I know what I just said was inflammatory. I understand it, guys. I get it. But ride with me for a second. Hop in the passenger seat. Let's have a talk. Why do I say that you're giving them more incentive to short it? If there's no news, if it's just running up on FOMO and excitement about the warrants, y'all remember what happened around the split time, all that excitement and hype and FOMO, and then what happened? It got smashed because that was overdone. My fear is not that it will run up. I hope it runs up. My fear is that some of y'all won't capitalize on that before they smash it. And I just want to remind you, sitting here as my friend in the passenger seat, there's plenty of shares to borrow and the cost to borrow is low. This is an easy short. So that's how I'm looking at it. Not because I don't want you to make money. I think I just got through saying, I think there's a high potential for a run up between now and the dividend X date or the distribution date. But it's also easy to short and it's cheap to short. And you should be expecting they will try and smack it down. That's what I think.
And don't forget, like I said earlier, what everybody retail considers the bad guys, the hedgies, are gonna probably have extra warrants, so they're protected on the upside. And if it gets high enough, they'll start trying to knock the stock down. They'll probably sell their warrants and short it, or just short it to hedge the warrants they have that are up in price. They love this. They love it. They'd love it to go up and hold warrants because then they can
and the bondholders are loving this return of volatility to the trade also.
There's no question.
It was getting dry there for a while, Sparky. The volatility dried up.
But you could see that because I know I send you the prices once in a while. You could see where the price leveled off and maybe even started.
Well, we lost Sparky. I'll see if he comes back. Let me get to Zachary's question. Hopefully, we didn't lose the stream, right? No, the stream's good. Sparky dropped off. We'll see. There he is. He's back. All right, you're back.
Yeah.
Let's move on to Zachary's question. Zachary says, can they only buy warrants in the open market if there are sellers of the warrants? I understand your question. Yes, they can only buy to the extent that there are sellers, but keep in mind, if you were someone that really needed a warrant, for example, I'm just going to run with your question. What would you do? It's supply and demand. Do you increase your bid? You increase what you're willing to pay till you find willing sellers. So there's going to be a market for the for the warrants. I can't tell you at what price that market will find equilibrium, but there will. It's not illiquid.
Yeah, at some point there'll be plenty for sale. That's
at some point. We can't tell you at what price.
I have no idea. That's what's going to be interesting to watch. I'll be watching with you. At some point, how much premium goes in over whatever the conversion price should be.
Zachary says, Zachary says some will sell, but not all. I mean, Zachary, if
Yeah,
the price gets high enough, people will sell.
But they don't need to buy all of them. That's what people keep thinking.
Yeah, I'm trying to address the crux
Yeah.
of his question. At some point, people will sell. Don't let these people on social media tell you nobody's going to sell warrants. Fucking absolutely, people are going to sell them.
There'll be people trading them. There'll be people buying in and out of them because they're very leveraged.
I mean, there's going to be
it's like trading options.
There's going to be plenty of willing buyers, and there's going to be plenty of willing sellers at the right price.
Yep.
What that right price is, I'm not smart enough to tell you. The market will tell you when they start trading.
Yep, 100%. There's not going to be a scarcity of these. There aren't enough of them needed that are that many short that there won't be some around at some point.
Chris says it would be running up without any fundamental reason. I see your point. Yeah, that is the foundation of my point. Like if it's running for no fundamental reason, I'm going to call that a FOMO run. And I'm going to start warning you guys, be careful, because at some point they're going to smash it down. If there is a fundamental reason, and that could even be news from the company, hey, who knows where the rally could end? Because
this is
then
an amazing 3 weeks, 3 or 4 weeks, whatever it is, it's going to be all over the place.
I like the bet. I like the speculative bet, Chris, and I'm making that bet with you guys. I don't know in what timing GameStop could have some news, but I like that bet.
Don't forget also though, and Tony, tell me if I'm wrong because you probably read this the same as I did. I don't think these warrants are going to be priced until like the 3rd. So it's going to be based on what the strike is. So in other words, if the stock goes from 26 today to 30 by the time it's out, none of these guys are down 4 points on warrants they don't have. The game is going to start when they actually price them and deliver them.
I mean, they're smart enough to already know roughly what the warrants are going to be worth, and as the price of GameStop goes up or down before October 3rd,
it's a calculation.
They can estimate it with reasonable accuracy. Because if I can do it, I know they can do it. They're way smarter than me. But yeah, you're right. They're going to be thinking about their plan, I think, Sparky.
I'm sure they have it all mapped out, modeled out. But what I'm saying is nobody is losing, and nobody that's short the warrant is losing a penny until they price it, and then.
And they're also just not going to get caught by surprise, like this whole narrative, like the shorts are going to be screwed. No, they have plenty of time to figure out what happens, and even on a day-to-day basis, as the price of GameStop changes, they can adjust their plan or their risk management or their hedge.
And by the way, they do that. The guys that are trading this all the time do that. You and I have talked about this. They have systems that adjust their risks literally, maybe every 20 minutes they're looking.
I think it is very foolish for you guys to sit there and think that someone's going to get caught by surprise and get wrecked on October 7th. Probably not. Probably not. But FOMO could happen. A price run up could happen. They might not be anticipating that, and that would be cool with me, my friends.
No, and don't forget that can happen to a portion of this, but a pretty big chunk of this doesn't really care because they're covered. I mean, that's my position on it. There's going to be some people that are going to lose money on this that are short. I have no question, but not enough of them out of the whole pile that it's going to make some big explosion, I don't think.
All right, I think this is a good place to end this discussion, Sparky, because I need to eat some dinner. It's 10 o'clock at night. Do you have any final thoughts you want to share with the folks?
No, I love. Thank you I'll get a better microphone so I could be a guest of yours more often. I appreciate you letting me be a little agnostic when I get on here because it's I love this stuff, and I wish everybody that's in this absolutely the best. And like I said, the only reason I'm not in it is I was a little too chintzy on my entry level, or I'd be riding there with you. So
yeah, what did you say you were trying to buy around 2150 and it didn't quite hit it?
Originally I was like 20 and a half. I'm just looking at the same thing. The issue for me is it wasn't something I was crazy in a huge hurry to buy.
Yeah.
So I think I hit 20 and a half, and after it got down to your level, like 2110 or whatever, and went back up to 22 and something, I moved it up, I think, to 21 3/4 or something. Well, it just never got back down there. So I've been waving at it ever since.
Well, I'm sorry you didn't get in, and there will be another time, Sparky.
No,
There'll be another one, as my grandma used to say.
I'm looking forward to the next 2-3 weeks because I think the entry price isn't as important to me as if at some point I see it get tanked a little bit for whatever reason, and I'll look at it and say, okay, is this something that's going to continue, or should it bounce back from this? I'll buy it at 28 if it looks like it's going to go to 35. I mean, that's what trading is. You don't look at the actual, coulda, woulda, shoulda level. It's what do you think is going to happen from the minute you make the decision?
Slave King says, best educated guess, what do you think GameStop is eyeing as a potential acquisition? I have no fucking clue. I will tell you guys, I told you at the beginning of this live stream and earlier today, if I don't know, I'm just going to say I don't know. I will tell you that I trust Ryan Cohen to make a wise decision.
Yeah, I think he's pretty shrewd, and to be honest with you, I'm actually more encouraged that they didn't immediately go pay too much for something just to get an acquisition on the books and show they're doing something.
Yeah,
I think the stock market's been really steamy. He's got all this cash. He'd probably love the market to have a little top blow off in anything to lower the prices of what he could buy. I'm guessing they probably have 3, 4, 5 candidates.
I've told Ryan several times in my videos, Sparky, Ryan, take your time. Don't rush into it. You got all the time in the world. Don't let these people on social media pressure you. Yeah. I get it. They want something to happen. I do too. But guys, the most important thing is that he invests that money in the opportunity that gives you the most return, because then we can revalue GameStop, hopefully at a much higher price level, if he does it intelligently.
I'd rather have them at least have a rumor or something they're looking at, and then try to evaluate, do I want to buy GameStop or the possible target that maybe they're rumored to buy, and go from there. You don't want to pay 50% too much for something, because that's not good for GameStop stockholders. It really isn't.
Sparky, I'm going to close with how I opened. I am opinionated, guys. I don't know everything, but if I have an opinion, it's because I've researched it to a point, and I will defend my opinions. It's perfectly okay with me if you have a different opinion. I know how to stay in my lane when I don't know stuff, and I try and bring on intelligent guests like Sparky here, who is a professional bond trader, to teach me, teach you, give you guys the ability to ask questions, because there's just not enough good education going on, especially on the pumper channels. There's in fact the opposite. There's cult-like misinformation, just outright fabrication of stuff being pumped into your heads, and it really makes me angry. And if you're wondering why I'm covering GameStop more and more, because this shit going on these pumper channels is really pissing me off. It's fine to be bullish, and like Sparky said several times today, talk about the reality. There's plenty of good things to talk about. There's a lot of good things to talk about. I talk to you guys about them, but you don't need to make shit up. And when I see people lying to their audience, it makes me just want to cover GameStop even more. So buckle in, buckaroos. These clowns that are lying to you guys, making shit up. It just encourages me more that this information, like what we covered this afternoon, like what we covered tonight, is needed. It's necessary. I get it. Not all of y'all want to hear it. Look, there's other channels you can go listen to, but there are people that actually want to understand and learn, and that's who we're here for. I'm not for everybody. I get it. I'm okay with that. Supporter of the channel, hater of the channel, whatever you are, thank you for being here tonight, Sparky. Thank you. We love you.
Pleasure.
And ladies and gentlemen, we will see you on the next one.
A red candle down by the dip, gotta hold our ground. We've been waiting for so long, Hedge's reign will soon be gone. A green candle up, a red candle down, by the dip, gotta hold our ground. Hedge's days are dead and gone, for the shorts we're going on. If you down and sit and stare, if you love it by the share. A green candle up, a red candle down, by the dip, gotta hold our ground. We've been waiting for so zip, got a hold our ground. And his games are dead and gone. Fuck the show, we're going along. If you down and sit and stare, if you love it, buy a share. A blue candle up, a red candle down. Buy the zip, got a hold our ground. We've been waiting for so long. Heavy rain, only gone. A blue candle up, a red candle down. Buy the zip, got a hold our ground. And his games are dead and gone. Fuck the show, we're going along. If you down and sit and stare.